Because you're a big Tesla bull, Gary, and I know you haven't changed your thoughts about it at all, right?
Nope, we're still bullish here, even though it's up 110% year to date. People are getting excited about the Cybertruck. Very unique looking. I don't know if you've ever seen one up close, but it's about as big as an F-150. It looks like it belongs on Mars. But people are going to see it, and then they're going to go to the Tesla website or go to the Tesla store and buy a Model 3 or Model Y. That's what happened with Model Y. It just stimulated interest in the Tesla brand.
In this video, Gary Black has some thoughts on Tesla and Tesla stock throughout 2023 and beyond. And speaking of thoughts, if you'd like to hear more of mine, 1, what's wrong with you? And 2, check out the links in the pinned comment, head over to Patreon and or subscribe over on Twitter for loads of exclusive content.
Let's bring in Gary Black, manager partner of the Future Fund, and I'm sure loving the big tech strength as much as anybody, of course, including and not limited to, though, Tesla's big run-up. Because you're a big Tesla bull, Gary, and I know you haven't changed your thoughts about it at all, right?
Nope, we're still bullish here, even though, it's up 110% year to date, but it had a bad, 2012. But, they're going to have good second quarter. The volumes will come out in a couple of weeks. They'll be up 75% year over year. The Cybertruck is coming probably in third quarter, which is a little early. And everybody's talking about it as an AI play. They've been investing a lot. They're going to start licensing their Dojo supercomputer probably next year. They're setting up a separate business unit, we believe. So that gives it a little bit even more spark. So we're still pretty bullish on it, even though it's up at about 52 times next year's earnings, but it's growing at 35%. So it doesn't look expensive the way we look at it, price earnings to growth. We think it's still a relatively cheap stock. We like it.
Well, that makes 2 of us. I still remain very bullish on Tesla, and Gary Black isn't even modeling robo-taxis. Quite the contrast. Tesla stock's up a ton. Gary's still bullish, has a lot of good reasons to explain why. Meanwhile, just a couple of days ago, you have the doofuses at Moron Stanley publishing a new note. Tesla stock went up a lot, therefore don't buy any more, please, because it went up a lot. P.S. We're increasing our price target by $50 per share because the stock went up, as opposed to because something fundamental changed about the company or the business. I think it's safe to say that one of Gary Black's turds understand Tesla better than most of the folks on Wall Street. Admittedly, very low bar.
What do you think could be within the realm of possibility for Tesla stock? Could we be seeing all-time highs again in this company?
We're still down from where we were. Back, remember in the fourth quarter, Elon had to sell about 23 billion of his Tesla stock to buy Twitter, and you had all this discounting going on in China and then in the U.S. Revisions to make the stock go to a new high, which we think is possible. You've got to get revisions to turn around, meaning earnings estimates have been dropping all year because they took pricing down in the first quarter, and they've stabilized, and that's why the stock has had an amazing run since about May 15th or so, because people believe that the second quarter gross margins are the trough, because we haven't seen any price cuts. Pricing has actually been stable. As we mentioned, people are getting excited about the Cybertruck. The last time they had a new product like this was in 2020 when they introduced Model Y, which was a crossover. And the stock, as you know, went up 7-fold in 2020 versus I think NASDAQ was up about 50%. So we think that's what you're going to get. Everybody's going to be very excited when Cybertruck deliveries start. It's very unique looking. I don't know if you've ever seen one up close, but it's about as big as an F-150. It looks like it belongs on Mars. But people are going to see it, and then they're going to go to the Tesla website or go to the Tesla store and buy a Model 3 or Model Y.
The second half of 2023 is certainly going to be anything but boring for Tesla. And in terms of Cybertruck, I really don't think people are truly appreciating the impact this thing is going to have when first deliveries commence. This is a high volume vehicle. Hundreds and hundreds of thousands of Cybertrucks will be delivered to customers over the next 12 to 18 months, and production will continue to ramp from that point forward. I don't think it's possible for anyone to see a Cybertruck on a public road and not look, not notice, and not wonder, what the fuck is that? The Cybertruck will be the ultimate driving billboard for Tesla. Love it or hate it, whether or not you think it's uglier than your girlfriend or the most amazing thing you've ever seen, or maybe both, it's going to be impossible not to notice and wonder. Cybertruck, in essence, is going to be a gateway drug to Tesla's other products. And these things are going to be everywhere. Waves of celebrities will be driving these things around. They'll be in music videos, in parking lots, on work sites, everywhere you can imagine. Cybertruck will be the ultimate head-turning product. But please don't tell that to the folks who are adamant Tesla desperately needs to start advertising yesterday.
That's what happened with Model Y. It just stimulated interest in the Tesla brand. And we haven't talked about all these EV charging arrangements between GM, Ford, now Rivian.
Yeah, everybody's on board.
The whole industry is getting behind the Tesla NACS standard. That's probably worth another 20 cents a share. We think the Cybertruck, because the street is underestimating it, is worth about 60 cents a share. So we think estimates for 2024, street estimates are about 70, 80 cents too low. And we think we'll start seeing people get more excited about Tesla as we get to the back half of the year and Cybertruck comes out. Now, that's interesting that Morgan Stanley downgraded today. It was a surprise to me that he took his price target up, but he downgraded. It's like he took his earnings estimates up. So that's not usual. Usually when people take earnings estimates up and price targets up, they don't downgrade the stock, but maybe he was just getting tired of it. Who knows?
I think the real reason Morgan Stanley chased after Tesla stock increased their price target by $50 per share, as I predicted they would do, literally predicted Morgan Stanley specifically ahead of time. How'd I know? While downgrading the stock, it's because they have no idea what they're doing. They never did have any idea what they're doing. They just chased the price up or down, continue to publish new research notes, some of them with some useful points and ideas, and others an absolute steaming pile of excrement, just to remain relevant. The Wall Street circus continues to expose itself as a bunch of clowns. Now, there are a few exceptions to the rule, but everyone who chased Tesla stock down and is now chasing Tesla stock up with their price targets has exposed themselves as being clueless clowns, because nothing fundamental has changed about the business. It's important to remember, a price target is not an estimate of what the stock will be worth. It's what you believe fair value to be. And that's based on assumptions. If the assumptions producing your fair value are not changing, your price target, your fair valuation, should not be changing either. So if you find yourself in a situation where the stock surges past what you think fair value is, and then you increase your price target without anything meaningful or fundamental changing to what produces your fair valuation, you're exposing yourself as a clown. The same is true if the stock's going down. If you're chasing the stock price down, reverse engineering a reason why the fair valuation is different now and reducing estimates for things arbitrarily just to come up with a lower price target so you don't look like a fool, you are a gigantic pussy. The way to spot an analyst who knows what's up is to look at who didn't dramatically slash their Tesla stock price target as the stock came down almost 80% over the last 12 months. Those who held firm. Likewise, as Tesla stock has surged higher, there should be analysts who knew what they were doing, who didn't touch their price targets. Now the key caveat here, Tesla gross automotive margins did come in a little bit lower than expected. That was one data point well after most of Tesla stock's collapse, which would have justified minor changes to a price target over the short term. Well, looks like margin's going to be a bit lower than we expected. That's a fair reason. But that is the only reason the price target should have gone any direction at all over the last 12 or so months, in my opinion. Nothing else fundamental has changed. Tesla's rate of production, the growth rate on production, remains largely unchanged. Their dominant position, largely unchanged. Their technology leadership, their software capabilities, their data lead in terms of autonomy, their leadership, their culture, their product roadmap. Nothing fundamental has changed. So you wouldn't expect price targets to be changing much, but that's not what happened. Tesla stock starts coming down. Just about everyone on Wall Street revises their price targets down and then conjures up an excuse as to why they're lowering their price target without admitting the truth. We don't know what we're doing. Then it starts running up and now everyone's increasing their price targets again, with nothing fundamental having changed other than the stock price being higher.
The company's been important to your fund, the FFND ETF, the Future Fund ETF, year to date up 26%. Where is Tesla as a percent of that fund at this point? Gary, give us an update. And then also, do you, though, still have a fund that is dependent on a company, concentrated on a company here that obviously last year got slammed?
Yeah. So Tesla is about 10% of the portfolio today. Okay. We took it down actually before first quarter earnings because we thought the estimates were too high because of the price cuts. The stock at the time, the stock was about 180. And then we bought back about half of it at 168. Not that we were day trading, but we thought the estimates had come down enough. And then the annual meeting happened. And we just felt very optimistic that Elon wasn't going anywhere. There was some debate that, maybe he would go to Twitter and give up Tesla. He hired Linda Yaccarino to run Twitter, which is great. I know Linda. I've talked to her many times. She will be great at Twitter. So we think there's less of a chance that he'll have to put money into Twitter because we think she can turn this around. You've got 2024 for Twitter. You've got the election. You've got the Olympics. So they should be cash flow positive by the end of the year. And she's a very strong media operator. So we feel good about that.
So you feel it's not going to distract Elon?
Correct. And he's not going to have to put money in, which is the most important thing. But more importantly, to your point, we think that earnings can start turning around here because the pricing has firmed up. Cybertruck's going to be huge. The charging contracts that they've set with GM and Ford and Rivian, and probably Stellantis is next, and maybe Toyota will be very good for Tesla. And in the meantime, we still have, the IRA credit just went into effect this year with $7,500. Tesla's getting on its Model 3 and Model Y, which are 90% of its volume. So we think there's a lot of information out there that is still not being incorporated into Tesla stock.
On this point, I strongly agree. I don't think most things that are relevant to Tesla are being priced into the stock. Story of Tesla's life as a public company.
So we're keeping it at about a 10% weight. We do worry a little bit about, the economy.
Right.
I heard you talk about before that if the recession hits, because the Fed insists on continuing to raise rates, as Powell has talked about the last 2 days, a recession will hurt the auto industry and it'll hurt Tesla. So that's probably the biggest risk, that the Fed does something stupid and keeps raising rates here.
Odds of the Fed doing something extremely stupid with interest rates are about 100%. Just wanted to share this very important piece of data. What we're looking at here is the magnitude of federal fund target rate increases through tightening cycles from 1971 to the present day. As we see here, we're looking at the multiple of rate increases since the starting point. So how many times higher are interest rates through the end of the tightening cycle from the beginning? Anyone notice an outlier here? Yeah, that would be the most recent rate hikes. We've now seen more than a 20-fold, as in a 20 times, not 20%, 20 times increase in rates from when the Fed first started lifting rates to the present moment. This has never happened before. Not even close. The magnitude of these increases is insane. People are failing to appreciate this, including the Fed themselves. This just won't end well. But hey, what would I know? I'm just some dumbass on the internet who doesn't know anything about anything. So just ignore my opinion. But don't ignore the data. Nothing close to this has ever happened before. Nothing could possibly go wrong. And if you disagree with me, it's possible that you are capable of interpreting data. Madness.
Okay, well, the last part there, of course, your own opinion inserted. Maybe fighting inflation is the smart thing long term, even if it means Tesla going down. Another two-parter for you real quick, Gary. Number one is, do you think there are price cuts in the 6-month to year-long future for Tesla's cars like it did earlier this year and late last year? And number two, is that a sign, if it happens, that things are softening on the margin?
How could we possibly know ahead of time what the answer to this question might be? If only Tesla had published a master plan on their website explaining that over time they'd make their vehicles more affordable, pass those cost savings on, and that's how the world would transition to electric vehicles. If only they told us ahead of time. If only they'd done a presentation this year explaining how they develop a new manufacturing system, some tweaks to motors and so on, to drive the cost of producing a compelling electric vehicle down to half what it currently is. If only that had happened ahead of time, we might be able to predict, yes, it's pretty clear that Tesla prices will, on average, trend lower over time. Unfortunately, none of these things are true, and if you happen to find evidence to the contrary, congratulations, I was just joking. The good news is, at the same time prices are coming down, Tesla's cost to produce said vehicles can be coming down too. Therefore, margins can in fact stay the same or even increase as cost savings are passed on to consumers. Just between you and I hope there's a wave of additional price cuts as Tesla continues to scale up production, Berlin ramps further, Austin ramps further. I hope the market panics, and I hope I can keep buying Tesla stock at an even greater discount. But remember, hope is not a strategy, so I'm not going to be waiting and hoping. I'm going to keep buying, and well, if it happens, it happens, and if it doesn't, still be buying, just not as cheap.
I don't think we're going to have more price cuts on Model Y, which is where all the volume is. That's now become the best-selling car and truck in the United States, even not just EVs, all cars. And the inventories are very low. We track the inventories every day. We can see them. And the inventories around the world are pretty low. So we don't see that. What we are seeing for the second quarter, there's some inventory discounts on Model 3, Model S, and X, which, again, that's not the same as a price cut, because once the inventory is gone, or at least depleted, then the price cuts go away. So we are seeing some of that as we end second quarter. But I think that goes back to our investment thesis. Second quarter will be the trough in gross margins. Gross margins at Tesla, auto gross margins, were about 30% last year. They dropped to 19 after the price cuts in first quarter. This quarter, we think they'll get down to 17. And then we see a gradual increase back into the 21, 22, 23 range. We've already seen price increases on Model Y, since April, as the inventories have fallen. So I don't think we're going to see price cuts.
Tesla's currently ramping 2 gigantic factories, one in Berlin, one in Austin, both currently only producing one vehicle, the Model Y. As many hundreds of thousands of additional Model Ys are produced per year, economies of scale come into play. By default, it'll be cheaper for Tesla to produce these, and they'll be more available for consumers to buy. Tesla's going to keep ramping production as fast as they possibly can and producing as many of these vehicles as they possibly can. And again, it's important to understand, if Tesla's passing on cost savings, it doesn't mean margins suffer. But I strongly suspect that we will see prices on Model Y trend lower over time. Of course, there'll be temporary situations where this isn't the case, where prices are increased. This all comes down to the market clearing price. If Tesla's making more of these things, there's more supply. At a very high level, I don't foresee Tesla's margins really going much lower than they are at this point in time, but that's entirely separate from the prices of the vehicles coming down. The cost for Tesla to produce these vehicles is falling. They can pass those cost savings on to consumers as long as wait times don't get too absurd. And how do we avoid wait times getting too absurd? Make more vehicles, and margins can stay where they are and continue climbing higher. At the same time, costs keep coming down. What do you guys think? A year from now, will Model Y be cheaper to buy on average than it is today? My suspicion is yes.
Again, if and the other thing that's really important is the EV credit goes from being a tax credit this year to an instant rebate next year. And so that means you could walk into a Tesla store, take $7,500 off, and when you're coming up with your loan payments, it's based on a $7,500 lower price versus a tax credit. You got to wait for your income tax return, and then you get the credit back. It's having an instant rebate off the purchase price is so much better, and that kicks into play January 1st of 2024. So there's really no need for a price cut, I guess, at this point in our mind.
Now, Gary does have a point here, and I'm not expecting any major price cuts anytime soon. My hypothesis is pretty simple. Give or take, today Tesla producing about 1 million Model Ys per year. 12 months from now, they could be producing 1.5, 1.6, 1.7 million Model Ys. Fast forward a few years more, they'll be producing many millions of these things. If this weren't the case, if Tesla wasn't massively increasing their production on Model Ys, then obviously these tax incentives, artificially making them even cheaper, would force Tesla to raise prices. And I still think there'll be an element of this, don't get me wrong. But over the long term, it seems clear to me. Tesla's going to be producing 1.5, 2, 3+ million Model Ys per year, and they're not going to be selling them at today's prices. They'll be significantly lower. Keep in mind, I'm not just talking about the United States. It seems like Gary's comments are very US-centric. I'm talking about planet Earth. Shanghai's producing Model Y. Fremont's producing Model Y. Austin's producing Model Y. Berlin's producing Model Y. Tesla's going to make as many Model Ys as they can and sell all of them, whatever price they need to sell them for. So to be clear, I don't expect any meaningful price decreases on Model Y over the next 6, maybe 12 months. But after that point, especially as Berlin has ramped massively, and Tesla's chipping away at the brand loyalty of European consumers, converting VW buyers, BMW buyers, Mercedes buyers across to the Tesla Model Y, I suspect we'll see Model Y prices keep going lower.
Okay. Hey, real fast, you also launched a long short fund.
Yeah. Thanks for asking.
Can you give us the kind of 60-second elevator pitch on how you're going to run it?
So FFLS, it's very unique. There aren't many fundamental-driven, bottom-up, long-short ETFs out there. It's high conviction. We have 30 longs, 20 shorts, and we play off the same mega trends that we use on the long side. Same research,
okay,
where we're looking at 24/7 information, entertainment, climate sustainability, big data, people living longer, lifestyle betterment. So when you see a short, it'll usually be something that's getting hurt by those megatrends. So a good example is Toyota. It's our largest short. Tesla's our second largest long. Google's our number one long. But Toyota's got 10% of the market globally, and they are nowhere in EVs. So as EV adoption continues to rocket ahead, it's 10%. Last year, it'll be 15 this year globally. We think it'll be 60% by 2030. They're nowhere in EVs. So it's our largest short.
Not surprised to hear that Toyota is the largest short in Gary's new fund. Toyota's f***ed. No ifs, ands, or buts. They are absolutely f***ed. Incompetent leadership, sheer stupidity, a culture of yes sir, you're a genius sir. I won't say anything that contradicts you sir, even if I think our ship's going to be on the bottom of the ocean soon. Yes sir, good idea sir. They're f***ed. They did this to themselves. It's not going to end well for Toyota, nor the Japanese economy. That being said, shorting stocks is a very dangerous game. My brain's nowhere near big enough to be doing it, so I don't. I certainly look at companies and think, if my brain was bigger, I might short that stock and I'll just watch what happens. It's a fun little game to play, but I'd rather be betting on successes than failures.
And so we're trying to look for offsetting hedges, because back to the market, we think the rest of the year is going to be pretty choppy. The Fed isn't sure. Well, we don't think the Fed, even though they sound sure, but we don't think they're sure they're going to actually raise rates the rest of the year. And so as we go through this choppy period, unlike the first 6 months, this is the first time that I can remember as an investor Well, we don't have really good clarity about what the Fed's going to do. They say they're going to raise rates by another 50 basis points, and that's what the dot plot says.
Yeah.
But we're not sure because inflation is coming down sharply. When you get to June, you're going to have year-over-year CPI down at about 3%. GDP right now it's estimated to be 1.5 to 2. So as we get into the July meeting, with inflation coming down, GDP coming down, and still systemic risk out there. You still have banks struggling because you've got money market rates of 5 to 5.5%, and they're paying 1.5 to 2% on deposits. So you still have the risk that the more they raise, the more that deposits could go out the bank's deposit window. And so as a result of that, you got a lot of systemic risk out there. So I believe as we get into the rest of the year, you'll have the economy choppy. And if the economy's choppy, a fund that hedges its longs with alpha shorts, and we're targeting, you gotta be careful, we're targeting S&P returns with half the risk because we are shorting. We're looking at about 100% long today. We're about 40% short, so our net's about 60. That net number can go between 40 and 60% based on our view about the economy and the markets. We're pretty bullish right now about the market, so we feel pretty good about it. FFLS is the ticker on the New York Stock Exchange.
All right, thanks, Gary. We got John. Appreciate it. Gary Black, managing partner of the Future Fund.
I wish Gary luck with the new fund. Got to say, he made a lot of very bullish points about Tesla, mostly on point. Do disagree a little bit in terms of Model Y and pricing. Again, over the short term, I don't really see more price decreases on Model Y, at least not meaningful price decreases. The money that the US government are throwing at consumers of EVs buying new vehicles is certainly going to help and might force prices up temporarily. But again, it's very clear over the long term. Tesla will continue to produce their vehicles for a lower cost and on average pass those cost savings on to consumers, providing it doesn't cause ridiculous wait times. That's the only caveat. Otherwise, they're going to keep lowering the prices of their vehicles across the board. They've literally told us this is their plan. One thing I can absolutely guarantee about Tesla, the second half of 2023 will be anything but boring for the company. I cannot wait to see first Cybertrucks rolling around on roads throughout the United States. I don't think anyone has any idea of the magnitude these things are going to have on sentiment, interest, and knowledge about Tesla. The only thing crazier than that is going to be when these things are driving themselves around public roads without human supervision or intervention. Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a fuck ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. It certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point and something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy. Wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely it's not that AG1, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it. You'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, Snake Oil Salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link at the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links at the pinned comment. See you over on Twitter and or Patreon, and don't forget to grab your AG1. Love ya.